Perseverance is not a long race. It's many short races, one after the other. Walter Elliot. And for us, it's 10 to 15 minutes each and every day, checking out these markets, figuring out what is going on, following established trends. And of course, our best trends are the weekly vertical crossovers. They work for us again and again and again. This is not short chart trading. This is long chart trading. This is looking for trends that work for us. What do we see going on in the markets today? We see the S&P 500 up a little bit, along with the NASDAQ 100 as represented by QQQ, 20-year bonds down, gold up, and that is where we are. Let's keep an eye on things and jump into these charts. What do we see with the S&P 500? We see that it is building a green up candle for the week. We can see the price percent oscillator moving up toward a crossing, which hasn't happened yet. Still negative, but moving up second week after two down weeks. Derivative oscillator losing momentum, still negative. Go to the 2-day. Now, we told you to watch for this. What did we see coming? Well, we saw it getting closer on the Friday, Monday 2-day candle. Well, the Tuesday, Wednesday ended with a crossover going up. So we shall now go ahead and, we'll move the arrow over. This is what we call a 2-day cross. It's not a recross. That would be going in the same direction as the weekly. Typically, a cross on the 2-day precedes the weekly moving after it, but not always in the same direction. We will also redraw our trend line. And of course, if we had been in a trade, which we were not, on the S&P 500, then of course this would end it. So we shall pay attention. Now, one of two things will happen. Either the market will keep going up and the weekly will pull over at some point and head in that direction, which again, it's getting closer to, but hasn't done yet. And if not, the 2-day could fail and could cross over going down, which we would call a 2-day recross if the weekly were still going down at that time. All of that's covered in our book, Charting Your Way to Wealth. If you don't have a copy, you need one. So that's where we are, and you'll see a link in the show notes. What do we see on the half day? Well, it, of course, crossed over, going up back on the morning of Tuesday, the 9th of March, and it is still heading up. It had been heading down, but then in the afternoon, moved back in the up direction on the price percent oscillator. Derivative oscillator still losing upward momentum. That's where we are, up 0.33% for the day. That's where we are on the S&P. Now, did I say earlier that it was up 1.3%? I'm not sure if I said that or not. I was looking at the net change, and forgive me there if I said that, 0.33%. The Q's up 0.41%. Been a long day, but let's jump into the Q's right now. What do we see going on there? Green up candle pushing through the weekly trend line. Overall, the market, though, still has downward weight on it. Unlike the S&P, this is the, after 3 weeks of down movement on the NASDAQ 100, this is a green up candle, the first one, and it's trying to push, well, has pushed through 3 days into a 5-day candle, the weekly trend line. Derivative oscillator still gaining a little bit of downward momentum. Price percent oscillator heading down, but again, each day it appears to lose more of that downward energy, but still heading down. What about the 2-day? Not a crossover. What do we see happening here? Well, we see price percent oscillator trying to head up. Still negative. Derivative oscillator losing downward momentum. We have a green up candle that has formed, pushed through the weekly trend line, and of course 4 days ago pushed through the 2-day trend line. So again, heading up. We still don't have a crossover though on the price percent oscillator. So again, still have negative energy there, but the Q's is trying to break out of it. What do we see on the half day? Well, of course, it crossed over in the afternoon on Tuesday, the 9th of March, and of course has been moving up with a little bit of sideways sliding. Seems to move up about a day and then sideways slide and then move up another day. In the morning down, but up in the afternoon, like we said, finished the day 0.41%. So that is where we are on stocks. Again, in a bullish market, trying to get their mojo back, but again, much, much slower for the NASDAQ 100 as opposed to the S&P 500. Let's go to 20-year bonds, down for the day 0.75%. And of course, we're reaching a lower low this week. Bonds just continue to trundle down. Price percent oscillator moving down. Derivative oscillator moving down. Go to the 2-day, and of course, we look back in time. We see that 2-day recross back on the 3rd of February. It has been good to you. Just continues to move on down. Price percent oscillator heading down. Derivative oscillator actually gaining a little bit of momentum. It had been losing it up until the last 2-day candle. What do we see on the half-day chart? Down in the morning, a little further, dropping a little further down in the afternoon as far as its most downward move. Price percent oscillator still heading down a little bit. Derivative oscillator negative, losing a little bit of momentum there at the end of the day. But that's where we are. That 2-day recross still doing quite nice. What's gold up to? Well, we look at the weekly chart for gold. Gold up for the day 0.71%. Are we finally seeing gold bottom out? Don't know. Don't know that to be true. You could have thought that back when gold sort of ticked down in December, to going into December, and then all through December ticked up only in January to start moving down. So we'll watch and see. Price percent oscillators about flat. Derivative oscillators negative, losing downward momentum. 2-day chart, what do we see there? Green up candle, pushing up on that weekly trend line. Price percent oscillator negative, heading up. Derivative oscillator losing downward momentum. Half-day chart, again, still trying to move up. We could redraw that half-day trend line a little better for us. There we go. And again, peaking up a little bit at the end of the day. We can see how high gold got and then sort of dropped, but ended up the day positive 0.71%. So still watching gold, see if it's going to cross over on that 2-day, and what is gold going to end up doing on this weekly chart. That's where we are, folks, as we end the day. Take a little peek, won't we, at Bitcoin and see what's happening with Bitcoin down for the day, 2.07%. So as we look at Bitcoin, we can see a green up candle forming for the week, but again, not reaching the high that it reached over the prior week. And look what's happening to this price percent oscillator, trying to cross over, going down. We'll see how the week ends up. Derivative oscillator just about flat, maybe losing a little bit of downward momentum. Price percent oscillator on the 2-day chart, red open box candle, that's a slowdown in the up movement. Price percent oscillator trying to pull away from the red signal line. Derivative oscillator is still losing some momentum there. So what we're really, really watching for is what's going to happen in the week with that weekly chart. Is it going to be a nice, clean, hard crossover going down, or is it going to get sloppy and maybe do a bounce off? What is the 2-day going to, is it going to help us and see it really pulling away from the red signal line? Or are we going to have things bounce off on the weekly chart, our signal line, and head back up again with a 2-day recross sending us in the right direction? We're just in a hold position, waiting, watching. If the 4-hour or the half-day chart's telling us anything, we can see the acceleration on the derivative oscillator heading down, along with the price percent oscillator pulling away from the red signal line, and that down movement we see there at the end of the day. So we'll continue to watch, wait, and see just what's going to happen on Bitcoin. That's where we are, folks, as we end the day. So appreciate you being with us. God bless. All the best from the whole team at Charting Wealth World headquarters.